Good morning. Today's Monday, August 12th. I hope everyone had a nice weekend. I know it was crazy hot here in Charleston, but that is kind of August in Charleston, so I won't complain too much about it. We'll circle back in December when it's snowing elsewhere and 65 degrees here. Um, Last week was kind of an interesting week in the market here. We had, I'm sure anyone that's turned on the TV, some interesting things going on in Japan. Uh, Not this past Friday, but the one prior. Um, the Japanese stock market dropped 12% in a single day. Kind of a couple things that spurred that. It seemed, and again, if you've turned on the television, you've probably heard them talk about yen carry trades. I'll touch on that briefly. And then the thing that's like kind of comical is the Bank of Japan hiking rates from the 0.1% all the way up to a whopping 0.25%. Kind of bananas that's where panic's setting in Japan is when we're raising rates 15 basis points to a quarter of a percent. But I'm not going to dive into the yen carry trades too much. It's basically you borrow money in Japan where interest rates are next to nothing, so you get free money essentially, and then you turn around and invest that money in other countries' debt in their currency. Kind of a great way to make a free 5 or 6%. So if you think about investing in the U.S. Treasury, that's going to yield between 4 and 6% that's been issued in the last 18 months. If you're doing it with somebody else's money, that's basically free return. The problem is if you then turn around and go to pay back the loan in Japan and the yen has strengthened to where your US dollars aren't converting to as many yen as they previously would have. So part of the what should have been a pretty boring market week with no first or second tier economic data coming out ended up being a very volatile one at the beginning of the week. Most of those losses from early last week, by the time the market closed Friday, were in the realm of where they started. So this week we'll see wholesale and consumer inflation measures, retail sales, and housing statistics. It's kind of a foregone conclusion that there will be a 25 basis point cut in September when the Fed gets together to meet. I know a handful of committee members are meeting this week to discuss the economy and just where things are. But I think what the market's most curious about is what subsequent rate cuts might look like. So we will hang tight on that. Lastly, and in my opinion, most importantly, if you have not scheduled your fall review yet, we're looking forward to meeting with a lot of you starting here August 26th. So please schedule those. I'll send the final reminder email out probably later this week, Wednesday, maybe Thursday. And be sure, if you haven't scheduled yet, anything you want to add to the agenda, make sure to include in the little box that prompts you at the end. So questions, comments, concerns, please do not hesitate to reach out, and have a great week.